All right, good morning, everybody. Can you hear me? Abe, Adam, good morning. James, Jim, good morning, Jim. OIS, good morning. Safe, Stephen, Joseph. Hey, Joseph, how are you? Khaled, good morning. All right, guys, it's action time. Let's read this market. We have a 200 and 100 that are in sync on the long side right now after a massive move. If you notice what happened yesterday, the market set itself up for a captain setup short on the 200 NT Rinko, a massive signal on the short side. And that's going to be relevant for the remainder of the day. It will be relevant next week as well. Um, and it really kind of happened after we closed the morning session. And I ended up taking a trade in that direction, making a little bit of money to round up my day. So I'll share with you that trade later on when we slow down. But that was just a massive behavior. We saw that same behavior up here, and the market kind of reacted to it in a different way, but it did react to it. So now you're getting that push lower in NQ. Let's actually take a closer look. So we don't want to, the longs don't want to see 24. If we start seeing 24, that's going to be an issue to this market. That means the market is disconnecting again. We have harmony zone number one, which is 850 by 40 and 25 by 15. It's harmony zone number two. Let's take a quick look at ES. ES is struggling. It's weaker actually than NQ. We have harmony zone number one, which is 280, 875 by 91 and 95 by 98. Those are short resistance areas against any price moves. The NQ, we have a candle reversal. On ES we don't. So there's a disconnect between those two instruments where ES is weaker than NQ. So what does that mean? That means that one is going to have to catch up to the other. And in this environment, I would think NQ would have to catch up to ES on the downside. All right, so now what we got going on is the 200 and the 100 are out of sync, and the market is at a threat to close at that 800, and it happens to be, and take a close look to this, it happens to be at the bottom end of the Globex band. So what does that mean? The, the Globex band is that range where momentum will start picking up under it or above it, but within it, it has a distinct personality. And that personality is back and fill and consolidation. We have Globex at 14,850. So we want to monitor that. All right.
Order filled. Order filled. Order filled.
There's a lot of consolidation going on right here. I mean, they keep coming in here. I mean, I'd rather be kind of short against 35, but it looks like the market is gonna play a different game here. So let's take a quick look here. So after a massive move like the one that we had yesterday, I mean, what should be our expectation of the market? I mean, our expectation is to see at a minimum at the open or a bit of consolidation. We're seeing now the 200 and 100 getting back in sync. So this is the second time they come up to that level in and around it, and they faded back into Globex. So if they come and test this break of this channel and they hold it, then I'm expecting a move toward target of 900. If we start breaking under 25 again, then the probability of, I mean, look at that. They put even a captain setup short right here and rolled it over. So we're gonna have to spend a little bit of time. It's early. It's 8:38. We just need to keep reading this market till we get a handle of what this market is trying to do. You're trading at Globex, and in and around Globex, you're getting chewed up here. The market is just back and forth. Okay. Are you getting a bit of conviction coming in here? Because that's a railroad and a switch trade coming in and around this area. So they put a captain set up short, they rolled it over, trapped some more people, gave us, here we go. So you're getting, the longs are coming in and showing a lot more strength. Plus we have channel number one coming into play right here. So in this time, with the way the market is going, so what should we expect? A push toward 900, as long as we don't go back to 35. And it's too early. And I suggest we just kind of continue to monitor this and see how the ideas are working out. So we're hitting target number 2. Yeah, that's another thing, man. We talked about the 900 being a target. All right, guys. So we're talking about this, and we're saying, okay, so we have channel number one, channel number two. Now we have channel number two on the short side, and we're trading in and around glowbacks. I'm trying to avoid this area altogether. Be honest with you. Okay. So right here, I mean, if they put a captain set up short right here, that could be something I'll be interested in. No. Okay. Okay. I mean, that's just all long behavior right here. I mean, that's where we're dealing with here. They hit harmony zone number one and just bounced off of it, and now they're working their way to that 90, the 900, excuse me, 14,900. Okay, so as long as we don't break 35, we're looking for pullbacks to be viable, while the 200 and the 100 are in sync. But what's clear and obvious that things are not robust. Like we're not seeing robust trending behavior. We're seeing a lot of backing and filling, running up, running stops, pulling back from these stops. So in this type of environment, where and location wise, we're better off kind of scalping this market and going for smaller targets. What do you mean, Abe? How do we see 35? How do we see 35? Yeah, I'm not sure I understand your question. No, I didn't say shortable. I said at if we get to 35, that's a technical damage to the longs, and the market will become a two-sided market at that point, and at that point we need to be just giving the market a little bit of time to see what they want to do in that zone. But that will damage the idea of being long. That doesn't mean automatically we'll go short. We just need to see a lot more information. This is going to be a two-sided market. Yeah, why 35? Because you're starting to dig under harmony zone number one. You're breaking harmony zone number one, and 35 to 30 is the middle of the range between harmony zone number one and two, and that is the area where the market has to really hold the line. They have to hold the line here, but absolutely at 35, and like you're gonna see a most likely a reaction here. Yeah, no problem. So I mean, okay. I mean, that's kind of what we expected the market to be. Good morning, Sheila. How are you? Good morning. All right, 35. Okay, so let's see. I mean, they got there, and now guess what happened? The 200 and the 100 are out of sync. So now we're back to this market that is really chopping people up. And if you are not careful and you overcommit with size to a market that looks like this, they're going to eat you alive. Adam, I'm not calling you out. I'm just saying that's the kind of market that you need to be hyper vigilant with. Okay, good. Yeah, so now you're wanting to see a little bit of a rally. That will set the stage for an actual signal. So there, you see how they're hitting 35 multiple times. They're gonna most likely rally up here a little bit. Let's see if they do that. Yeah, that's something. That is something. So what's the personality? What's the personality here? They're chopping it up around Globex. I mean, that's just that's what you're dealing with here. That's the channel that they're playing with right here, and let's see if they build up the second channel. That's the second channel right here. Okay. It's a zig and a zag. Okay. So I mean, the idea here, I mean, like, why are they going to 70s? Like, to me, the the shorts should be showing a little bit more conviction in the market, like that. Here we go. I mean, see, that's just very choppy. Like, I'm really suggesting you guys avoid this range altogether. If we get anything above 75, that will position the market for pullbacks to be buyable. If we trade under 30, that will set the stage for a potential reversal of this 200 NT wrinkle, and we can, absorb the market and see if that scenario is coming through. We got 3 minutes to the top of the hour. As far as news today, we don't have much of anything going on. Yeah, you're getting like a 50 NT wrinkle captain set up long and a 40 NT wrinkle captain set up short. So that just right there also confirms the narrative that the market is having. Avoid trading this area.
Order filled. Order filled. Order filled.
All right. Well, that's an action that's worth noting. And the market disconnects again, or not disconnects, but they touched harmony zone number one. So they had the 9 o'clock reaction to the price, and you could see how they rally above, sell off under, and come back to touch the balance area. Okay. So if you can catch one candle reversals, where the market runs up a couple of candles and come back in with a one candle reversal, and you just take those for as much as it can give you, that would work. But yeah, they don't want us short, they don't want us long either. It's not like they're I mean that the longs are working in any meaningful way either. Yeah, there's another captain set up short on the 30 NT Rinko. So now within the area of 50 to 65 and 47 to 55, both of them are just such a resistance zone, basically from 40 to 60. But you're seeing two captains set up shorts in that rotation. And here you go, they're putting a switch trade on. Well, yeah, we'll see what the market has to offer us here. Here we go again. I mean, you look at ES for example. I mean, let's look at the 6 NT Rincon. Yeah, they're putting a switch trade right here, so that's going to be a big deal. That's gonna, as long as we continue to trade under 87.5, which is the close for that signal, we should see a burst of energy lower on ES. Well, they're proving me wrong here. 87. I mean, why? They want to put a captain setup long here? Okay. Let them do that. Let them do that. Well, here you go. They put a captain setup. Okay. So we have a disconnect between the 20 between in NASDAQ, and we're getting a choppy price action right here where a short signal should have pushed the price lower, and they're taking one more rotation. Yeah, this is gonna go down, guys. That's gonna go down here. Okay, so let's see if we can get that 35. Ultimately, we have to see a 32 level close. Okay, yeah, here it comes. Here it comes, here it comes. See how that rally holds up. Here we go. God dang it. See that captain setup right here on ES? Failure of it. That formation was the catalyst for
Order filled. Order filled. Order filled.
yes. Let's see here.
Order filled.
Yeah. You see in the selling pressure right here, okay? So they're dancing between those two zones, right? That's the neutral zone for this rotation, and the dominant force in this is the shorts, confirmed by by ES, and the captain setup failure with a switch trade that they just put on. That is a weak behavior. The market needs to do more work. Oh. Sell, baby, sell. Sell. All right, this is the third time. What is the third or the fourth time that we come to harmony zone number 2? So, expectation wise, what do I expect here? I mean, I expect that heaviness in this market ends up coming and busting through the 800, because you could see that the market is heavy. Like, we spent over 40 minutes just trying to push harder, higher, and the market keeps like hitting that ceiling over and over and over. We had 4 rotations in the 100 NT Rinko chart that connected and disconnected with the 200 NT Rinko. So that's just right there tells you the degree in which the market is really choppy. I mean, they're putting the captain setup short right here. Okay. I mean, we should expect a push lower right now, potentially to target number 3 of 808 against that stop of 35. You should be seeing it coming in here. Here it comes. Boom. Okay. I mean, that's kind of what I want to see. What we're talking about, that's trucks per year, forward sliding to see results 3,500. This is why Tesla is getting. Okay. So Tesla's getting shit on. Okay, boom. Look at that captain setup. Really kind of came in. The heaviness, the signal, the rotations, all of them came in, and now you have a 200 NT Rinko that's reversed. That's going to lend itself to a move towards 775. Market is short on rallies. It looks like you like taking candies from babies, Stephen. People frown at that. Yeah. All right, all right. So what are they doing over here, man? I tell you, we should see. I mean, they're trying to bounce it. We're at the bottom end of the harmony zone. They're running it back up. Shorts are in charge. The target is 775. Let's see if we can get a trade in.
Order filled. Order filled. Order filled.
Okay, okay, yeah. See that right there? That's a good one. 801. The shorts are stepping up. They're stepping up. Shorts are still in charge, and the target is 775. Yep. So we hit that target, right? 775. Next one is gonna be the next one is gonna be 750. You have harmony zone number one, that's 800 by 810 and 825 by 835. That's interesting. So the market is in harmony. We have harmony zone number one, 800 by 810. We haven't tested it yet, but there's a lot of scalping and trend trading going on right now into the next target of 750. We're about 20 points away from that target. Here it comes. Here comes the target. You should be taking some of these trades, right? Look at that. Boom. Oh, that's close. Yeah, here goes. It's gonna hit it right here. At least it should. Here it comes. All right. So next target, 725. That's. I mean it. I didn't laugh at you. I didn't laugh at you at all. I thought it was very, very possible, especially with that captain setup on the 200 NT Rinko that's just sticking out there. That 700 is in sight.
Order submitted. Order canceled. Order submitted.
Oh, we're gonna give that a shot. But it's gonna be one of those things where I'm gonna add an 85 if I have to, and also
Order submitted.
I'm gonna add right here.
Order submitted. Order filled. Order filled.
And that is a thank you. Thank you, thank you. Thank you, thank you. That's a pretty one. Man, I didn't even get a tick of heat. Not even a tick of heat. That's the power of the harmony zones. Not a damn tick of heat. So I took one here and I added to it right on that close into those targets. And we're getting even a bigger move off of it. Like, what would I had to do to kind of hold on to this trade a little bit longer? I just had to kind of commit myself for the last contract to go for a one candle reversal trailer. The next target is 725. And that kind of takes us to this right here. That's our month so far. We're at 64.72 at equity high, and that trade gave me 411. So that's where we at. I don't know if any of you jumped on that trade or understood the logic, but $725. You loaded up on what? What do you mean you loaded up? Oh, okay, I got you. I got you. You still in that? Good for you. You going for bigger moves. I like it. Now you're gonna get rewarded on that too. 725 is not too far, and this market is weak. It's really weak. Well, I mean, if if you're anticipating that 700, trust me, everybody else is anticipating it. So you gotta almost like get yourself out of that trade ahead of it because everybody's gonna be, trying to do the same thing here in a minute. They're anticipating a huge level. And whenever we get to a big level, like at 800, 900, 700, the market typically gets close and gets faded, at least momentarily. So just watch for that. So I gotta ask myself a question here. Okay, so what would have got me? I mean, I understand what got me in the trade, obviously, but what would get me to stick around? Like, what has the market to look like in order for me to stick around? And what conditions would I have to put on myself to to say, okay, I'm still in the trade. So one of them is to see the harmony zone, not the harmony zone, but the harmony wave, which is that gray zone. So that could be a condition for me, and as long as I'm trading, price is trading under it and has not closed it, that can be the first reason for me to stay in. Then I can look at target number 4 and 5 for areas of flush selling pressure where I could just take my trade out. So if I'm trailing this, I would have to trail it right now at 45 and stop myself at 40, 45, 46. Excuse me. Okay. You see the actual shadow trends are tightening here, which is telling me that the price is an area where it could start to change. Okay, so here we go. 725 coming up. That's a big number. Target number 4 is hit. Back in. Man, they're all over the place. 73. What's 14 73. 43. Okay, so yeah, you're gonna get paid here. You're getting here it comes boom. That target is hit. Now guess what, Steven? We're getting to your 700. Now that's the official target to the Harmony Trading System. It's 700. Um, let's get a tally up here from everybody. I want to know where we at across the board. Abe, how we doing? Adam, where you at? James, any trade? Jim, how is Jim doing? Joseph, OIS. I mean, that's the only way I can read your name. Be honest with you. Safe, Sheila, any trades? Khaled, I haven't heard from you. Steven up 350. Adam up 3100. Only 2 to 3 contracts. Yeah, that's good. That guess what that means? You're not stubborn today, and you're trading with the trend. That's what that means. Small ball is always good, man. You always want to try small ball into adding to a winner, because if it goes against you, you're not paying that much. This is gonna it's this market is a market that's anticipating war, and the headlines are right now that coming out does not look promising, and the market is just very defensive because they expect the actual um, escalation in the Middle East to start this weekend, either Saturday or Sunday. So you're getting a market that just like don't want to hold nothing overnight. Don't want to hold nothing over the weekend. They want to see what the hell's gonna happen in the Middle East. It's already a shooting war across the region. It's just gonna get worse. And what they're afraid of is gonna a serious interruption to world commerce and effects on oil supply. Because just let me just throw that scenario in your head. If the Houthis down in south in Yemen start lobbing missiles on American bases within Saudi Arabia, for example, then that escalates to a shooting war. Then they start attacking refineries in Saudi Arabia. Okay, very, 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 very possible. Okay, I mean they have assets to protect those assets, those you know uh, refineries, but constant attack, you're gonna get interruption. Then oil tankers going back and forth to the Red Sea, and interruption of that has an impact. If it escalates more than that and Iran gets involved, then the Persian Gulf oil tankers going to the refineries in Saudi Arabia are going to get impacted, and the rest of the Gulf area. Okay, so that's just one itty bitty segment of escalation that could happen. You get Hezbollah involved, which they're already involved, but it escalates. And you just look at a scenario of a regional war and interruption to oil supplies potential and to world commerce. So now in that type of environment, is the market really want to hold a bid over a weekend when the spark may be happening Saturday, Sunday? They will never they were never immediately right now engaged. Let's just do it by proxy, since everybody likes to fight a war via proxy. Okay, like we're fighting United States fighting a war against Russia in Ukraine via proxy. We're not lobbing missiles at them, but we're giving all the missiles to be lobbed against them through Ukraine. So Iran is going to do the same thing. They are supplying the Houthis, they're supplying Hezbollah, they're supplying some of the whatever you call them militias in southern Lebanon, Hamas. So you're getting um, a war via proxy going on, and the potential for escalation is significant. and the market is reacting to it. $700. Here you go. Here you go. Where's Steven on this one?
Order filled. Target filled.
Yeah, it's just. Yeah, I mean that's just to be expected. To be honest with you, I mean that's actually not a bad area to fade this whole move, right here at 700, or as close to it as possible. I mean, all right, guys, here we go. Boom, and target is hit. 700 is hit. Since the 700 is hit, the next target to this is 675. 675. Good morning, Chris. Good morning. Good morning. All right, so that's target number 5 here. Target number 6 is going to be 679 and a half. 679 and a half. All right, so here we go. I mean, they came in to test that Harmy zone number one. I mean, that's you're getting a reaction. Didn't quite get up to that 25 level, but close enough. And you're getting a bit of a push. They're gonna be buying that pushback, by the way. Meaning, as you get close to that 700, you're gonna get some buying interest coming in.
Order filled.
Ah, alrighty, that's fine. I gotta take that stop. Give it a try. It was a risky fade against all of that, be honest with you, but it's still worth it. I mean, right here they typically will bounce it, and if they bounce it, I would have made like 20 to 30 points easy into that harmony zone. But that tells me that the market is still a little bit weak. And now you'll see the shift, right? Now you're gonna see the whole thing rally back up. Like I knew we're not too far away from the bottoming behavior. I mean, that's basically what you're gonna be seeing here. A little bit of a bottoming behavior.
Order filled. 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 Order filled.
we're not too far away. We're not too far away. I mean, they're basically dancing around the 700 level. baby. Let's go. Let's go. Market's going. Target. Target is 675. Okay, 675. So we hit that level and we are shifting Harmony zone number 1 to 700 by 10 and 25 by 35 is zone number 2. Anything between 10 and 25 is the neutral zone. We're looking for rallies to short into this market. The market is just consistent on the short side. I got what they call it a bit antsy with that last trade. All right, so where we at for the day, if that matters. That trade took a little bit off, so but we're still positive for the day, and I'm looking for the next trade. I mean, why would you do that? All right, guys. So I'm looking at this market here, and you're getting a switch trade right here. So you're gonna get a push up and probably a retest of Harmony Zone number one. We'll take a look. The market is decisively short, so I'd rather be short than long. Um, but we're seeing a little bit of slowing down of the selling pressure. I mean, you're getting multiple attempts here at reversals. It's almost like the market is putting the brakes on. So I'm not saying I'm gonna go long. I mean, I'm thinking about this trade back, and I'm like, okay, what can I have done a little bit better on that one? I think considering the environment, uh, letting that market reverse, test, and come back with a higher low would have been a better approach than trying to just take the first touch of that type of behavior. So that's just me thinking about what I can do differently here and evaluating my read of this market. But anyway, so we got that, and now what are we looking for? I mean, we're looking here we go. I mean, we're getting a little bit of a bid and a rounding behavior in this market. Yeah, we should see an attempt at harmony zone number one, and we'll see how strong it is, and based on that, we'll make the next decision. Let's see here. I'm just gonna give it a shot, and I'm gonna put a very tight stop, guys. Like literally 83, 83. Yeah, right here. Come on, baby, let's go. Gonna go break even. It's 87. Yeah, let's see if I can get up there. Yeah, I put it on the micro, thinking I'm trading the main contract. Damn it. Let's see if we can get into that trade. We're gonna get. There's a good chance we're gonna hit the 700. Here we go. We literally hit it to the tick and paused. I mean, this is the first test of Harmony Zone number 1, right? I mean, damn, that was quick too. Look at that. I mean, to the tick. Yeah, you're running right into the Harmony Zone number 1, so that's just gonna be something that the market's gonna react to it. I thought I was, trading in my in the regular contract, but I ended up buying here and getting out for a small profit, but on micro. It's silly, to be honest with you, but all right, let's see what this market wants to do here. I mean, there is a little bit of a bid coming in. You have a channel shift. You're coming to the Harmony Zone, testing well. You're going to get a sideways market here and a little bit of a bid that could push the price higher. Target number 2. Well, I mean, make sure you go break even and make sure that you take profits along the way, because the entry here is at a minimum, it's 90, right? So 90 to almost 700 with a break even stop, you should be just fine. If you waited 2-3 candles to buy, yeah, you got stopped out. That's most likely what happened here. You know what? Here we go. I mean, I'll give it a shot right here. And break even. I'm gonna go break even quick on this. That's fine. We made what half a point. I'm fading, like I'm fading here against the overall trend, but there is just an obvious, to me at least, a behavior in this market that will support a bid, and I'm making a choice to take it. Okay, so you're still running into harmony zone number one, so that there's a lot of resistance up there. However, here we go. I mean, look at that. So that was my target number one. We should be going higher. Should be going higher, but I wouldn't buy here. Like where I bought is where I need to be buying. I could have bought at 87.75, and then start going for that target one or target number two with a break even stop. At this point, the fact that I went break even quickly is what got me out of it. But I'm comfortable with that because I'm literally going against the overall trend, but I'm exhibiting and seeing a behavior that is worth taking a shot at. There you go. Here you go. Here you go. Here you go. Take your money. Make sure you take your money. You're running into harmony zone number one, Adam. Make sure you take some of that money off. Yeah, good for you. That's good. That's good. You're probably going to be asking for those shares back in a minute here. You're going to be asking for those contracts back. Well, we could jump in that second rotation. Look at that. Ah, you were afraid. Well, I get it. The question I would have for myself is, hey, listen, do I understand the market that I'm looking at? Am I reading the market accurately? Am I sticking to my stops, which I should, period, anyway? But that's always a question that you got to ask yourself. Okay? Am I capitalizing on the momentum? Am I understanding who's getting trapped and why and when and how? Is my average winners better than my average losses or expenses? Right? Could ask that question too. That's stupid. I told you you're gonna be saying that in a minute. You see how I feel about it. I was there perfect at 85, but I made a decision to take break even, and it is what it is. It's okay. Guess what? Are you an effective trader? Do we understand the market? Do we understand the signals, the behaviors, the money management? And does it show on your equity? That is the most important part. Yep, yep, yep. Now we're testing harmony zone number two or close to it. And you're going to get into a situation where you're trading anything above that zone of 735, you're going to get an issue with the short. The shorts are going to start struggling big time here. I mean, we already see them struggling. But the question, I mean, like here come they're testing it to the tick and coming back in. These zones are not a joke, guys. I mean, they're really, you see them. They work. Yep. Can I get my... Oh, Adam, I know what you're feeling right now. And actually, here we go. I mean, we had a captain set up switch trade right here. Like, that is actually a signal to... It reacted to harmony zone number one, but that switch trade triggered that. Captain setup is right here, then a switch trade right here. And you're getting that push. Top end of the harmony zone is... The market is reacting to it. Pullbacks are... I mean, you're going to go through that period. Once we get to 750, then I'm going to start looking for pullback as a buying opportunity with small number of contracts. And we're going to be, looking for scalping and a reversion to the mean type of trading that could potentially take us all the way back up to, the 800. If 750 shows up, obviously. If it doesn't shows up, then that's just a different dynamics altogether. Yeah, that's the key here. That's the key. We're doing good too here, man. Yeah, I took a stop, big deal, but we're at 77 and up 61.38 and at equity high. And this is my equity curve for the month. It's very stable. It's a 45-degree angle going up. The drawdowns are not significant. Thoughtful trading, not a lot of risk taken, and not a lot of contracts taken. That doesn't mean I wouldn't, take more contracts, but that's how this... It's like 1 and 2 contracts coming in and out for the most part. 1 to 3 contracts. Anyway, guys, 11 o'clock. It's Friday. I gotta break into my first beer for the day. But I'm done, and it looks like most of you have done well today as well. Yeah, you remember those days, Adam? Adam knows, he's been here for a while. He saw me doing 100 contract trades. Yeah, those days will come back. They'll come back. I go in phases, and I get to a point where I'm building. Then I have a lot of equity reserves. Then I'll start going, 5, 10. Then as I do better, I'll start going 10, 20. And then we'll get to 100 contracts. Yeah, it will happen. That will happen again. All right, guys. So we'll see you on Monday. Have a blessed weekend. Enjoy yourself. Precision is a decision. Always trade in harmony. And we will see you on the next one.